The opening price prediction was a beat, so it was predicted lower than the market closing and holding put, and it opened much lower. That was like talked about for the mortgage delinquency expectation is high, so expecting a slight more liquidity from the banks to have funds for the insurance. I mean, it's a risk. It's not actually crashing. But I did get the leap call for the bear ETF of the real estate. So I do think housing crash is coming after the rate hike. The September rate hike. I think that's when it starts to see it take effect. And plus, next week has some kind of a housing report. I think sales or something, and I think those will come out lower. So, and today I actually wasn't around, so I missed the whole market. But as you can see, this is just following the downtrend. And the following week has a lot of uncertainty, a lot of important reports, including the PMI, the PCE, and the preliminary GDP, and the Jackson Hole Symposium, which is annual meeting with the central bankers. And usually, last year they just hung out. It seemed like there was no special announcement to be made about it. But Jay Powell is he has a speech on Friday after the meeting, and because there are a lot of uncertainty, I think the market will open lower on Monday. But after all this PMI, the preliminary GDP, and the PCE, I think it'll head up because that's all indicates to lower inflation and strength of the economy, so or robustness of the economy. So I think it'll start to head up after those reports, but because of uncertainty, I would say it'll close or open lower than the close on Friday. And I have the range from 418.83 or 55 is actually, I mean, I just put it like this because it's right in the middle of this one. So let's just keep it that way. 418.90 to 420.70. That's the opening range, or anything lower. So the opening trend is lower, but sentiment is bullish. And the other thing, GTC, I don't know if I mentioned it on the video, but I did chase this yesterday around here, $12, and then took it up to here, the shoulder line. Because whenever this type of run happens, there is like strength test, and if it fails, it's gonna go straight down, and if it passes, it's actually rather safe to keep holding it. And it absolutely passed. So let me tell you about the test. Test is the head and shoulders. Do you want to trade? That's kind of like the, I would say, only time you want to trade in head and shoulder pattern, because what happens is once there's a pop, and people will sell out, right? Because in the very lows cost zone, nobody is sure if they will pop or not. So they would pop, and then people will sell that, take profit, and see it moving. It's still gonna pop out, and then people hear about it overnight, and maximum pop at that moment. The momentum carries, and then when the momentum carries, everybody sells. Oh, this is it, and they sell it. So we have a head now, and people who miss this, they saw this all run, but they didn't believe in it, and they missed it. They enter here, and then enough people enter at that point, it actually carries further like this. But if not enough people carries, then we form another shoulder here. That's why we have head and shoulders pattern for this type of meme runs. So there's always in the beginning a strength test by the head and shoulder pattern, and this one obviously passed, but I didn't know that. Nobody can predict that. So I got out over here. I thought this was the end. So I got out over here and then I chased it back here. So what I do think will happen is still we'll follow this strength test line, which is head and shoulders line, and if you see this, we form another head and shoulder here, but I think it could carry on a little bit further. It could trade along this line, which it is already. It's kind of bouncing off of that line. And way things work is, first of all, there's no selling power, so there will be no rugging. Nobody's gonna rug this. It's like even if you sell it, somebody else is gonna hold it. It's not gonna be like the BBBY type of thing when one person holds like 10% of the thing. This is nothing like that. So that's why it's relatively safe. But what happens is day traders will trade the ranges, with this line being the ultimate bottom. They would trade from here to here, like a couple cents. With larger volume or whatever, they would see the movement and the likelihood of it bouncing down or up. They would trade that range. That's why it'll just be very tiny along this line. And I do think it could fall down to 40 at one point. Like if it follow and then one point boom drop. But I do think it could open around 79 or at least reach 79 next week. So I am actually not a big position, but I am actually holding GCT.